Good afternoon and welcome to 5 insurance gaps that can derail your business and how you can close them. Thanks for joining us today. I'm Ronald Merrill with GTM. In a moment, I'll introduce to you our presenter. But first, let me tell you about your way to ask questions today. We'd like to have your questions throughout the presentation. Something comes up you have a question about, just use the questions functionality up towards the right of your screen, upper right. There's a little box with a question mark in it. You can click on that, ask your question there, and you just type it in. At the end of the presentation, we'll go to your questions. We'll get to as many as time permits. If we don't get to your particular question, we'll be sure to follow up with you the next day. Now, you'll receive an email later today with a link that contains a video recording of today's presentation as well as a PDF version of this as well for future reference. Our presenter today is Ed Catalano, the director of GTM's insurance agency. Ed brings more than 20 years of insurance expertise in his role as the GTM insurance agency director. He oversees the agency, including change management, as its business model becomes more and more aligned with that of a standalone independent agency while maintaining all the core values of GTM payroll services. Ed manages all day-to-day operations of the agency team, builds strategic partnerships, implements customer-facing product and software enhancements, and supports the team development behind growth initiatives. A licensed insurance broker in multiple states, Ed's background includes running all aspects of the independent insurance agency for a local bank, and he was on the board of directors as president and treasurer for that bank. Prior to that, he spent 14 years managing claims for Travelers Insurance, rotating through the claims center into different management roles. And now we can tap into all his expertise and experience. It is my pleasure to introduce to you Ed Catalano.
Well, thank you very much, Raleigh, and thank you to the attendees and anybody taking time out of their day to listen to the recording. With this type of topic, it's unfortunate that you only find out you have a gap once a claim is denied or a lawsuit arises. Today, we're going to cover these 5 common gaps, and every one of them is fixable. So in today's agenda, we're going to go through the 5 critical insurance gaps, some real-world scenarios for each gap, some practical solutions to close those gaps, then building your comprehensive protection strategy, and finally some Q&A associated with this presentation. So if we get into the 5 critical insurance gaps, we're going to start with employment practices liability coverage. So what is that? It's a specialized form of business insurance that protects a company from financial losses resulting from lawsuits filed by employees, possibly former employees, or job applicants. These claims typically involve allegations that their legal rights as employees have been violated in some way. So basically, EPLI will generally covers the cost of associated costs associated with defending a business against employment-related claims, and that includes the legal defense or the settlement or judgment that may be imposed. Common coverages within your EPLI coverage is things such as discrimination, harassment, wrongful termination, retaliation, and other workplace issues like possibly failure to promote or wrongful discipline, invasion of privacy, or even a breach of employment contract. One item that is especially important on these policies as well is realizing what may or may not be covered. Within EPLI, it's important to address third-party coverage as well. And that is just an optional extension that protects against claims from non-employees. So this could be a customer that came in and maybe was harassed by an employee, or an allegation of harassment, or even a vendor that comes in to deliver has an allegation of harassment or discrimination. So with that, the problem arises that when you do not have this EPLI coverage, most general liability policies exclude these employee-related claims. Even simply an allegation against your company can cost anywhere from $15,000 to $75,000 to defend in New York. So how do we go ahead and take care of that? Of course, with EPLI coverage, but some real world scenario. And even this one on the screen is very relevant. But within the last 60 days, we've seen some of our clients who do not have the coverage, and it is a very simple scenario. A staffing agency in California had a call in from a male applicant asking why they weren't being considered for a position. And the staffing agency said that they simply do not hire males for that type of role. The complaint was filed, and the penalty came across as close to $75,000 against that staffing agency. Unfortunately, it was a very small agency, only had 3 employees, but that $75,000 did put them out of business. So as far as a solution for adding EPLI coverage for that client could have had the coverage for approximately $1,200 a year. And that would have covered the defense, any potential settlement, and consequent judgment that did come out of this. So the next gap, cyber. Cyber insurance, also known as cyber liability insurance. This is another specialized policy designed to protect businesses and individuals from the financial impact of cyber attacks, data breaches, or other digital threats. Standard business policies like general liability typically exclude digital data losses, making dedicated cyber coverage a critical gap filler in modern risk management. You have 2 different types of coverage with cyber. The first one's your first party coverage, and that's going to cover the immediate direct expenses your business incurs to respond to an incident. So those could be incident response, notification and monitoring, cyber extortion, business interruption, data recovery. Another element of cyber is your third party coverage. Now, third party coverage protects you against liability to others. This protects you if an outside party, like a customer or partner, sues you because of a cyber incident on your systems. So coverages under there include privacy liability, network security liability, regulatory actions, media liability, which includes claims of libel, slander, copyright infringement. Some key items to remember with cyber is what is potentially not covered. There is a potential that lack of controls could exclude you from cyber coverage if you enter into a policy. And this could be something as simple as a failure to maintain baseline security like multi-factor authentication. So when you're getting these policies, it's very important to understand your duties. Understanding your duties will make the process much simpler. Typically, close to 50% of all cyber attacks target small businesses. Like I said, traditional policies exclude cyber losses, and the average business data breach could cost upwards of $200,000. Now, some real world situations. We actually had a real world situation just within the past 30 days as well. And along with this one on the screen, we had a client who had an employee discussing business matters on their personal social media site. Because it involved libel and slander, that was actually covered under the cyber policy, because there were other companies that came back to the client and demanded some losses. Next slide. So now, of course, the solution on that is the cyber liability insurance, and typically that can go anywhere from $1,000 to $3,500 a year. It's important because it helps implement employee training. It does educate you on different security tactics, and within GTM, there are a lot of different options to properly get you covered there. On to the next gap. It could be commercial auto insurance and your hired and non-owned auto. There are two distinct types of business insurance that address who owns the vehicle being driven for work. So your commercial auto insurance, that policy is for vehicles that the business owns, maybe a long-term lease, or it's registered in the name of the company. It'll cover that specific vehicle as long as it's scheduled, or possibly that you have all vehicles scheduled. And it'll cover physical damage, liability, and usually medical payments or uninsured motorist coverage. The hired and non-owned auto, that provides liability only protection for vehicles the business does not own, but uses for work. This could be a hired auto, and that's generally a vehicle that the business may rent, maybe a short-term lease, or even borrows from somebody. A non-owned auto, that's usually covers personal vehicles owned by the employees when they use that vehicle for business errands. It could be such as picking up supplies or maybe visiting a client. The HNOA, which is hired and non-owned auto, this is critical because usually general liability insurance typically excludes auto accidents, and personal auto policies may deny portions of claims if they discover the vehicles being used for business. The real world will happen very quickly and very without much intent. So for instance, you could have an employee that you simply ask to go down to the corner and pick up a ream of paper from the store, from Staples, very innocently, but they are on a work function. That situation there could happen like this HVAC driver driving his personal truck, picking up supplies, actually was involved in a serious accident, injuring 2 people. Between those 2 people, medical bills exceeded $400,000. The personal policy of the vehicle only had a $100,000 limit. The business had no non-owned auto coverage, and that company ended up settling for $320,000, which ultimately drained their reserves. The next consideration is solution, of course, to that is to go ahead and get the commercial auto with the non-owned auto endorsement on there. You can also have the potential of adding a hired and non-owned auto endorsement onto a business owner's policy. So if you do not own vehicles within the company, You won't be able to get the commercial auto, but the hired and non-owned auto endorsement would be available typically on the business owner's policy that you may have, or even a general liability policy, which you generally should have. The next gap, property and business interruption. So commercial property insurance and business interruption coverage are separate but complementary protections. While property insurance fixes the stuff, business interruption replaces the income lost while that stuff is being fixed. So under the commercial property insurance, this policy protects the physical assets of your business from things like fire, windstorm, theft, vandalism. And that's generally your building coverage, your business personal property. And a good thing to remember on a differentiation of coverage between policies is whether they're covering replacement cost or actual cash value. While a replacement cost will be more costly upfront, that will pay for new items that are lost at their current market prices, where actual cash value pays for the depreciated value, which is basically replacement cost minus age, wear, things of that nature. Business interruption. This coverage, this is a financial safety net that triggers when a covered property loss forces you to partially or maybe fully close. So that's going to take into account lost profits, fixed operating expenses, your payroll, which will help ensure to keep your keep paying your key employees so they don't leave for another job, and possibly pays for extra expenses to get you back to business faster. That could be renting a temporary location or expediting equipment shipment. Now, real world situations. A retailer suffered the fire loss. Of course, the building was only insured for $300,000, and that building, that policy was purchased 8 years ago. So as this policy aged and the inflation occurred over those 8 years, the cost of replacing that building substantially increased it to $475,000. The insurance paid the $300,000, leaving a $175,000 gap. In addition to that, the business interruption was only limited to 3 months. The rebuild took close to 7 months. So there was another $140,000 worth of loss due to the business interruption. And that business nearly closed. Of course, the solution to this, you want to make sure that minimally every other year, you're taking a look at your property values. A very good practice would be to ask your agent for the insurance carrier to go ahead and do a revaluation on the property. This will cover in 2 ways. One, the insurance company will then be responsible for bringing up the proper value, so that if a time of loss there comes an argument with this coverage, we can go back to the insurer explaining that they set the value, that we did not set the value, and the owner did not set the value. Also, it's important to understand that you may need a total rebuild on your property, and you could extend that business interruption coverage to 6 to 12 months. The next coverage gap. This could be your commercial umbrella or excess liability insurance. And both of these provide additional protection when a major claim exceeds the limits of your primary policies. While often used interchangeably, they function differently in structure and scope. So for instance, your commercial umbrella, that sits over multiple policies. could be over your general liability, your auto, your employer's liability, while an excess liability typically applies to only one specific underlying policy. The coverage and scope is different as well. So whereas a commercial umbrella can be broader and may cover incidents that are excluded by the primary policies, whereas your excess liability follows strictly the form that is on the underlying policy. So if the underlying policy doesn't cover it, the excess does not. Whereas if the underlying policy does not cover it on the umbrella may pick it up. And that's called a drop-down coverage, where the umbrella is going to be primary. Usually the umbrella is more expensive because of this broader risk factor. And generally, the more cost-effective is the excess, as it covers more targeted defined losses. Your commercial umbrella works like a blanket protection. It definitely fills a gap. The umbrella pays for it from the first dollar if the underlying policy doesn't cover it. The excess liability strictly follows the form, as I mentioned, and it has contractual requirements to satisfy, specific client contracts that require higher limits than just one coverage. And a good example of that is usually on commercial auto. Some common exclusions for that type of policies: professional liability, first-party property damage, possibly intentional acts, and cyber risks. So typically, your underlying policies generally have $1 to $2 million cap, and these excess and umbrellas are a good way to quickly add $1 million, $2 million, $3 million, $5 million, $10 million worth of coverage at a very reasonable level. One lawsuit can generally deplete a general liability policy, and usually those aggregates are over the policy term as well. So in this case, we had a landscape company that was trimming a tree. A branch fell through the client's roof, seriously injuring the homeowner. Medical costs, repairs, and lawsuit totaled close to $2.8 million. The company had a $1 million general liability. The remaining $1.8 million was attached to the personal assets. And that certainly could lead to bankruptcy and business closure. Of course, to fix this, we would certainly look to market a commercial umbrella or an excess policy, depending on the specific coverage, and $1 to $5 million worth of coverage, depending on the exposure, can be as little as $400 to $800. But generally, when you get up into that range with higher risk situations, which may be construction companies or fleet vehicles, then that can get substantially more, can go to the $4,000, $5,000, $6,000, $7,000 range. But the important thing here is that it certainly protects the businesses and personal assets involved. All right, so from here, we take a look at just building a comprehensive protection plan. And, 5 steps to this. Certainly minimally every other year, but schedule yearly reviews for your audit, not just at time of renewal, so you have a better understanding. Certainly read policy declarations and ask about exclusions. Really understand what you're buying. Implement risk management to reduce claims. And a lot of times carriers will offer a lot of free services to clients to assist in this. And of course, work with an independent agent to make sure you're accessing multiple carriers and getting that expert advocacy. Insurance protects everything you've built, and the better you understand your risk tolerance, the better you can purchase the proper insurance to make sure you're covered. Some key takeaways. Most insurance gaps are easily identifiable and affordable to fix. The cost of proper coverage is always less than the uninsured loss. And you've taken a lot of time to build your business, and it's just too valuable to leave exposed. With that, I'll turn it over to Raleigh.
Ed, thank you very much. And thank you for the information you provided us. It was great. Stick around. We'll have some questions for you upcoming. Want to let you know, folks, that GTM Insurance is a trusted local agency that provides exceptional service, effective solutions, and personalized attention. Whether you run a small business, not-for-profit, or a mid-sized company, it's essential that you operate with the right insurance and the right amount of insurance for your needs. Let GTM Insurance customize a package of insurance products that will keep and meet your needs and fit your budget, offering insurance policies underwritten by major companies and carriers. GTM Insurance can also customize benefits packages for your employees. GTM's employee benefits design skills, cutting-edge technology, and expert HR support can help you streamline and automate processes, reduce your costs, and relieve administrative burdens while delivering benefits that will delight your workforce. We don't believe in one-size-fits-all benefits plans, which can lead to employee disengagement or dissatisfaction, higher turnover, and difficulty attracting top talent. Instead, GTM crafts customized plans that align with your needs and goals, which means happier, more productive workers without the stress and hassles of trying to do it all yourself. With GTM's HR consulting team at the ready, you'll have access to experts who can assist you with designing a benefits plan, understanding your employees' needs, and transitioning your benefits administration, while you have the support that you need every step of the way. And with GTM, you can also automate your open enrollment, onboarding, and benefits reconciliation to eliminate errors, simplify benefits for employees, and free up time for more pressing matters. All right, let's move on to questions. We had some questions come along. Ed, you ready to field a few questions?
Certainly, and the only thing I'd like to add to your spiel there is that we also have our family of GTMers, which includes GTM Insurance, GTM Payroll, GTM PEO as well, and can certainly assist you in certainly saving a bunch of money and getting the proper expertise to your business to help you.
Great points, Ed. Thank you very much. The questions that came through, we had some during the sign-up process. We'll get to those first. If you have questions and you haven't yet asked them in the system, just go up to the upper right-hand side of your screen. You'll see a little box with a question mark. Click on that. You can type in your question, and as time permits, we'll have Ed answer your questions. But first off, we're going to go to a question that came in during the sign-up process. And it's a pretty simple one, but it's an important one, I think, too, Ed. How do I really know if my current agent is giving me good advice?
I think that's very simple. Just like a doctor or anybody else, you go get a second opinion. The only way that you can truly gauge information that you're getting is to validate it through multiple sources. And whether that takes 2 agents, 3 agents until you're satisfied, I'd strongly suggest that if you have any questions or you doubt it or you just want to validate anything that an independent agent is telling you, simply call another independent agent and get their opinion.
Great. All right. Here's one. What's the difference between admitted and non-admitted insurance carriers? What's that all about, Ed?
Certainly. New York State Department of Financial Services regulates insurance sold within the state, and this could be any other state as well. An admitted company has gone through the application process with the state to be able to sell their product within New York. This is important because if, for whatever reason, that insurance company may fail or become insolvent, New York State will back that set of policies that are in place with any claims. A non-admitted is usually what we call excess lines. Excess lines exist because all of these admitted companies will only take on so much risk. So you wouldn't find a standard or an admitted company that may take on the risk of a underwater explosive expert. The risk is just too random, too much risk involved, of course. So we have to go out to carriers that may not be admitted in New York State, but New York State allows them to sell based on certain contractual items. So typically, non-admitted carriers will handle a lot of a risk that a standard company would not have an appetite for.
Do we work with both types of carriers, Ed?
Yes.
Okay.
Most insurance agents will need to work with both sets of carriers because, especially in today's volatile insurance industry, it is there are more and more risks that are getting pushed into that non-admitted classification, unfortunately.
Here's another question for you. Can I get cyber insurance even if I've already had a breach?
Just like any other insurance, if you've had recent losses, you can certainly get more coverage or initiate coverage. The key part of that would be to make sure that whatever breach occurred, that there's been actionable items to assist in preventing the breach again. And just like anything else, insurance would take into account prior exposures and look for the story on how that was fixed. So we can certainly place it, and we can certainly get coverage in that type of situation.
Thank you, Ed. I don't see any other questions. I think that's all that we have for today. If you do have a question or something occurs to you a little bit later, please feel free to reach out to Ed. He is available. We'll put, yeah, there's right there, your contact information on the screen. And so we'll give you a moment to take that and jot it down. If you have any questions, you want more information, please, folks, feel free to contact Ed directly there through that contact information and ask your questions. He'd be happy to help, and he's got a great team backing him up as well. Thank you, everyone.
Just one note there, Raleigh. I think my phone number is listed wrong there.
Well, yeah. Let's get that right. What's the right
number? But the phone number is 518-881-0220.
518-881-0220.
Correct.
All right, folks. Hopefully you got that. And thank you for participating with us today. We appreciate you being on hand. Ed, thanks for all the great information. And there's more available to you. Just reach out to him and GTM Insurance. I'm Raleigh Merrill, wishing you a great day, and be looking for that email that comes with a recording of today's session and also a PDF version of the presentation. Thank you.
Thanks.